Disclaimer: this content is for educational purposes only and is not financial advice. Imagine opening a drawer in your home. Inside sits a stack of foreign banknotes you bought years ago. You were told those notes could one day make you financially free. Maybe next month. Maybe after one major announcement. Maybe after a decision the public hasn't heard about yet. For thousands of people, that promise has lingered for years. It has been repeated in YouTube videos, shared across online forums, passed around in chat rooms, and discussed in newsletters claiming that a massive financial event is always just around the corner. But here's the question almost nobody stops to ask. What have financial regulators actually said about these claims? Not anonymous insiders, not social media influencers, not people claiming to have secret government contacts. The official agencies whose job is to investigate investment fraud and protect investors. Today, we're going to examine what those agencies have publicly said. We'll look at warnings issued by regulators. We'll examine documented court cases. And we'll explore why this story has continued for so many years, even though many of its biggest predictions have never come true. This documentary isn't about attacking people who own Iraqi dinar. Owning foreign currency is legal. Many people purchased it because they believed it might become more valuable in the future. There's nothing wrong with asking questions about an investment. The goal of this documentary is different. It's about understanding how investment claims should be evaluated. Because once you understand how regulators separate evidence from speculation, you'll have a much better chance of protecting yourself, not just from one type of investment claim, but from many others that appear online every day. By the end of this video, you'll know what official regulators have actually documented, what they haven't documented, and why that difference matters. Let's begin. To understand today's story, we need to go back more than 20 years. After the Iraq War in 2003, Iraq introduced new banknotes as part of rebuilding its financial system. The Iraqi dinar remained the country's official currency. Like every national currency, its value is influenced by economic conditions, government policy, trade, inflation, and confidence in the country's financial system. Over time, however, a different story began spreading online. Supporters claimed the Iraqi dinar was dramatically undervalued. According to these claims, one day the currency would experience a massive increase in value, often referred to online as a revaluation. The idea was simple. Buy a large amount of Iraqi dinar while it's inexpensive. Wait for the revaluation, then exchange it for a much larger amount of money. For many people, that sounded like an opportunity that was too good to ignore. After all, Iraq has significant oil reserves. The country was rebuilding after years of conflict. And for a relatively small amount of money, buyers could purchase hundreds of thousands or even millions of Iraqi dinar. That combination made the story emotionally compelling. A small investment, a little patience, and the possibility of life-changing wealth. As interest grew, so did the amount of online content. Websites appeared. Discussion forum expanded. Newsletters promised exclusive updates. Eventually, YouTube channels and live streams began attracting audiences eager for the latest predictions. Some creators discussed publicly available economic news. Others began making much more specific claims. Certain promoters suggested they had access to confidential government information. Some predicted exact dates for a revaluation. Others claimed that major financial institutions had already approved a global currency reset. In many cases, these claims were presented with confidence. But confidence and evidence are not the same thing. That's where financial regulators became increasingly interested. Because when extraordinary financial claims are made, one question becomes more important than any other. Can those claims be independently verified? If the answer is no, investors are left relying almost entirely on trust. And history has shown that trust without evidence can create opportunities for investment fraud. Before we examine what regulators found, we first need to understand something that is often misunderstood in online discussions. How do currency values actually change? Because once you understand that, many of these claims become much easier to evaluate. Before looking at fraud cases and regulatory actions, it's important to understand how currency values actually work. Because once you understand this, many of the claims you'll hear online become much easier to evaluate. Currencies are constantly changing in value. Every day, exchange rates move up or down based on many different factors. Economic growth, inflation, interest rates, political stability, international trade, government debt, and the decisions made by a country's central bank. No single event determines the value of a national currency. Instead, exchange rates are influenced by a combination of economic conditions that change over time. This is why currency markets are often described as some of the largest and most closely watched financial markets in the world. Because so many participants are constantly buying and selling currencies, dramatic overnight price movements are generally uncommon for established national currencies. That doesn't mean exchange rates never change significantly. They can. Periods of political instability, financial crises, or major economic reforms can cause currencies to rise or fall. But when someone claims that a currency is about to increase by thousands of % almost overnight, it's reasonable to ask what evidence supports that prediction. Another idea that often creates confusion is the difference between revaluation and redenomination. Although the two terms sound similar, they describe very different things. A redenomination happens when a country changes the face value of its currency. For example, if inflation has caused prices to become extremely large, a government may introduce new banknotes that remove several zeros. A 1,000-unit note might become a new 1-unit note. The numbers printed on the currency change, but the purchasing power usually remains the same. A loaf of bread that cost 1,000 old units might simply cost 1 new unit instead. The numbers become smaller. The value does not suddenly multiply. A revaluation, on the other hand, refers to an official increase in the exchange value of a currency under certain exchange rate systems. These events are generally far more limited than the dramatic increases often described in online investment promotions. Understanding this distinction is important because many online discussions blend these two concepts together. When that happens, ordinary currency reforms can be mistaken for events that would create enormous investment profits. Financial regulators have repeatedly encouraged investors to understand exactly what they're buying before relying on claims of extraordinary future returns. And that brings us to the next question. If these predictions have circulated for so many years, what does the publicly available evidence actually show? This is where speculation and documented evidence begin to separate. For more than a decade, online predictions about the Iraqi dinar have followed a familiar pattern. Specific dates are announced. New exchange rates are predicted. Claims are made about secret government meetings. Anonymous insiders supposedly reveal that a major announcement is only days away. When one prediction fails, a new explanation often appears. A delay, a hidden agreement, a change behind the scenes. Then another prediction follows. The cycle repeats. The important question isn't whether people are free to speculate. They are. The important question is whether extraordinary claims are supported by independently verifiable evidence. When researchers examine publicly available information from official institutions, such as the Central Bank of Iraq and other recognized financial authorities, they do not find public confirmation of the dramatic, life-changing revaluations that have repeatedly been promoted online. That doesn't mean exchange rates never change. They do. But extraordinary investment claims require equally strong evidence. And so far, that evidence has not been publicly presented. This is one reason several U.S. state securities regulators have issued investor alerts discussing Iraqi dinar investment promotions. Although each regulator uses slightly different language, their message is remarkably consistent. Be cautious of investment opportunities that promise extraordinary returns while relying on information that cannot be independently verified. It's also important to understand what regulators have not said. They have not said that owning Iraqi dinar is illegal. They have not said that every person discussing the currency is committing fraud. Owning foreign currency is legal. Talking about foreign currency is legal. Speculating about future exchange rates is also legal. The concern begins when speculation is presented as certainty, or when promoters claim to possess secret information that investors cannot independently confirm. That's where regulators encourage people to slow down, ask questions, and verify the facts before making financial decisions. Because history has shown that investment fraud often begins with a very simple promise. Trust me, instead of, here's the evidence. And that raises another important question. If so many predictions have failed over the years, why do these stories continue to spread? If these predictions have continued for years, a natural question follows. Why? The answer isn't as simple as saying that everyone involved has bad intentions. Some people genuinely believe the information they share. Others may simply repeat what they've heard without checking whether it's supported by evidence. But in some cases, there are also financial incentives that encourage these stories to keep circulating. Over the years, an entire online ecosystem has grown around the Iraqi dinar. Some websites sell newsletters promising exclusive updates. Some offer paid memberships that claim to provide insider information. Others earn advertising revenue from YouTube videos, blogs, podcasts, or websites discussing the latest breaking developments. There have also been businesses that sold Iraqi dinar to customers, sometimes charging prices above typical wholesale currency exchange costs. The business itself isn't necessarily the issue. The concern arises when selling the currency is combined with unsupported promises of extraordinary future profits. From a business perspective, attention has value. More viewers often mean more advertising revenue. More website visitors can mean more sales. More subscribers can lead to more paid memberships. In other words, the more exciting the story becomes, the more valuable the audience can become. Think about it this way. Which headline attracts more attention? Nothing changed today. Or, historic financial event could happen this weekend. Most people already know the answer. Excitement attracts clicks. Certainty attracts attention. And urgency encourages people to act before taking time to verify the facts. This doesn't prove that every dramatic prediction is intentionally misleading, but it does help explain why sensational claims often spread much faster than careful, evidence-based analysis. History has shown that this pattern isn't unique to currency investing. Similar marketing techniques have appeared in many different investment schemes over the years. Promises of exclusive access, secret information, limited time opportunities, guaranteed wealth. The products change. The marketing strategy often doesn't. And that's exactly why financial regulators focus less on the product itself and more on how it's being promoted. Because when extraordinary financial promises replace verifiable evidence, that's when regulators begin paying closer attention. And in several cases involving Iraqi dinar-related investment promotions, that's exactly what happened. At this point, it's important to separate opinion from documented facts. Financial regulators do not investigate people simply because they are optimistic about an investment. They investigate when there is evidence that investors may have been misled or when securities laws may have been violated. Over the past several years, the U.S. Securities and Exchange Commission, the Department of Justice, and multiple state securities regulators have publicly announced enforcement actions involving alleged Iraqi dinar-related investment fraud. Although every case had its own unique facts, investigators repeatedly described similar warning signs. Promises of unusually large returns, claims of exclusive insider information, secret government contacts, urgent deadline, and investment opportunities that investors could not independently verify. In one civil enforcement action, the SEC alleged that investors were persuaded to invest in opportunities connected to Iraqi dinar using false claims about extraordinary profits and exclusive investment access. According to the SEC's complaint, investors were promised extremely high returns based on representations that regulators later alleged were false. The case was eventually resolved through legal proceedings. In another case announced by the U.S. Department of Justice, prosecutors alleged that money collected from investors for Iraqi dinar-related investments was not used in the way investors have been told. According to court records, much of the money was allegedly diverted for personal expenses and payments connected to the operation of the scheme. The defendant later entered a guilty plea. Federal prosecutors have also brought additional criminal cases involving businesses and individuals accused of making misleading claims while promoting Iraqi dinar investment opportunities. Some cases involved allegations that investment funds did not exist. Others involve claims that promoters falsely represented access to government officials or exclusive financial opportunities. Again, every case is different, and every legal matter depends on its own facts and evidence. But when you step back and compare these cases, a remarkably consistent pattern begins to appear. Extraordinary promises, secret information, pressure to act quickly, and claims that investors had little or no way to independently verify. Those same warning signs also appear throughout investor education materials published by the SEC, the Commodity Futures Trading Commission, and several state securities regulators. They consistently encourage investors to be cautious whenever someone promises guaranteed or unusually large profits, little or no investment risk, exclusive insider information, or urgent deadlines designed to pressure quick decisions. These warning signs are not unique to Iraqi dinar promotions. They appear across many different forms of investment fraud. That's why regulators encourage investors to verify claims using official sources rather than relying only on promotional videos, online communities, or social media personalities. One point deserves to be repeated. Owning foreign currency is not illegal. Discussing foreign currency is not illegal. But when unsupported claims of extraordinary profits are presented as established facts, that's where serious legal and regulatory concerns can begin. And behind every investigation, every lawsuit, and every court filing, there are real people whose financial lives were affected. That's the part of the story we'll look at next. When we talk about investment fraud, it's easy to focus on headlines, the investigations, the lawsuits, the court cases. But behind every case file is a real person, someone who believed they had found an opportunity to improve their future. Many people who purchased Iraqi dinar weren't professional investors. Some were retirees hoping to strengthen their retirement savings. Some were military veterans. Others were ordinary families searching for financial security. Most weren't trying to get rich overnight. They simply believed they had discovered an opportunity that others had overlooked. The promise sounded simple. Buy now. Wait patiently. And when the revaluation happens, your financial future could change forever. For some people, that hope lasted for years. Predicted dates came and went. Each missed prediction was followed by another explanation, another rumor, another announcement, another reason to keep believing. Over time, many investors found themselves caught in a difficult emotional position. Walking away meant accepting that years of hope might have been based on claims that never materialized. Psychologists sometimes describe this pattern as the sunk cost effect. The more time, money, or emotion people invest in an idea, the harder it can become to step back and evaluate new evidence objectively. This isn't a sign of weakness. It's a normal part of human psychology. Investment fraud often succeeds because it appeals to emotions before it appeals to facts. Hope, trust, fear of missing out. These emotions affect people from every background: age, education, income, experience. No one is completely immune. That's why financial regulators repeatedly encourage investors to verify claims before making important financial decisions, because preventing fraud is always easier than recovering from it. So, what can we learn from all of this? The first lesson is surprisingly simple. There are no guaranteed shortcuts to building long-term wealth. Every legitimate investment involves some level of risk. Whenever someone promises extraordinary returns with little or no risk, that's a reason to slow down, not speed up. Financial professionals generally recommend a few habits that have remained consistent for decades. Understand exactly what you're investing in. Read information from official sources. Ask questions. Take your time. And never feel pressured to make a financial decision because someone says an opportunity is about to disappear. Diversification is another important principle. Rather than placing all of your savings into one speculative idea, many investors choose to spread risk across different types of investments. While no strategy guarantees success, diversification can help reduce the impact of any single investment performing poorly. Another valuable habit is learning where to verify information. Before trusting extraordinary financial claims, consider checking official resources such as the SEC, the Commodity Futures Trading Commission, and your state securities regulator. These organizations regularly publish educational materials designed to help investors recognize common warning signs of fraud. They may not predict the future, but they can help you recognize patterns that have appeared in investment scams for decades. Because successful investing usually isn't about discovering a secret. It's about making informed decisions based on evidence, not excitement. So, what is the real story behind the Iraqi dinar? In many ways, it isn't just a story about one currency. It's a story about human nature, about hope, about uncertainty, and about the importance of asking difficult questions before making important financial decisions. Over the years, regulators have repeatedly warned investors to approach extraordinary claims with caution, especially when those claims rely on secret information, guaranteed profits, or promises that cannot be independently verified. The documented court cases we've discussed today don't prove that every person talking about the Iraqi dinar has bad intentions, nor do they prove that every buyer was deceived. But they do show a pattern that regulators have publicly investigated again and again. And that pattern offers an important lesson for all of us. Whether the investment involves foreign currency, cryptocurrency, stocks, real estate, or the next opportunity trending online, the same three questions still matter. Where's the evidence? Can a claim be independently verified? What do official sources actually say? Those questions may not sound exciting. They probably won't go viral, but they can help protect something far more valuable than a sensational headline. They can help protect your savings, your confidence, and your ability to make informed financial decisions. If you found this documentary helpful, consider sharing it with someone who may benefit from understanding how investment claims should be evaluated. And if you enjoy evidence-based documentaries that separate facts from speculation, consider subscribing for more videos like this. Thank you for watching. Stay curious, stay skeptical, and always let evidence, not emotion, guide your financial decisions. This content is for educational purposes only and is not financial advice.